What's up, good people? It's Natasha Varela, the Moneyista, 20 years in audit, accounting, and tax, 13 in a large business and international division of the IRS, examining large entities that report 10 million or more in gross receipts and or assets. So I want to talk about reasonable compensation. Now, in audit world and IRS world, a lot of times the key words for your business are reasonable, ordinary, and necessary, right? So ordinary and necessary are expenses that are necessary, for lack of a better word, to keep your business going, right? Because the ultimate goal is profit, right? And so to the IRS, you have to prove yourself with the intent to make profit via your business activities. That's how they define a business versus a hobby. Why is that important? Because hobby expenses are not allowed. So if you are running a business and the IRS examines you and they determine that your business operations are that of a hobby, okay, no intent to make real profit, they will disallow all your expenses and you'll be taxed on just the income because hobby expenses are not allowed within the Internal Revenue Code. That being said, you must engage in expenses or take expenses that are deemed ordinary and necessary. Things like advertising, right? Advertising can prove your intent to make profit, right? You have to get your services or products out there to be known to your customer. Things like web hosting, right? You have to have a web presence nowadays. Things like employees, right? Payroll services, things that prove that your business is actually in service and has intent to make profit. That being said, I want to talk about a very highly scrutinized item, and that is compensation. Now, the only entities that allow the owners to be paid via payroll are C Corps and S Corps, right? C Corps are not common amongst small business owners, so we're just going to go and talk about S Corps. Okay, so S Corps allow the owner to pay themselves a salary. In exchange, the S Corp is not subject to self-employment taxes, unlike your LLCs. Whether it's a single member or multi-member LLC or a sole proprietorship, you are subject to self-employment taxes. How do people avoid self-employment taxes? They elect to be treated as an S Corp, subchapter S. In exchange, you must pay yourself as the owner a reasonable salary. Now, why is owner's compensation a highly audited item, a highly scrutinized item? Because you're avoiding self-employment taxes. The IRS is going to say, hey, we need to make sure that you're paying yourself a reasonable salary, right? And not just trying to avoid self-employment taxes by paying yourself some minimal amount, right? Because when you do put yourself on payroll and you do pay yourself a salary, okay, you have to have payroll taxes remitted, right? Payroll taxes are withheld just like any other W-2 employee. You have to have taxes withheld, and your employer usually withholds them and remits them to the Internal Revenue Service on your behalf. Now, what happens is people will elect to be designated an S Corp, pay themselves a minor salary, which means minor payroll taxes, and avoid self-employment tax. The IRS does not like that. So that's why they say you have to pay yourself a reasonable salary. Well, what's reasonable? Reasonable is usually determined by your sales and benchmarks to other companies of similar nature, right, in your industry. Okay. So if the benchmark for your sales, let's say, is your sales is 500,000 and the benchmark is, say, I don't know, $60,000 or $70,000 or $80,000 in salary, and you pay yourself $20,000, that is a red flag. Okay, you have to pay yourself on par with other companies of like kind and that have similar sales. How do you find this? There are several ways you can go and research what reasonable is for your company. You can go to BizStats. That's a popular one. We use that in the Tax Strategies Mastermind. And we plug in our entity, which is, an S Corp or C Corp or whatever have you. And then we look at the benchmark versus the sales of our industry. And so we make sure we're not that far off. So it is important to pay yourself a reasonable salary because the IRS wants to make sure that you're not avoiding self-employment taxes and not trying to pay your employee payroll taxes. Okay, that's a big deal. A lot of people try to avoid that. I also want to note that transferring money from your business bank account to your personal account is not payroll. Okay, that's not putting yourself on salary. That is an owner's draw. Payroll is when you actually withhold the appropriate amount of taxes, okay, and remit it to the government. Usually we have a payroll company. Okay, tell people in the Tax Strategies Mastermind, go ahead and hire a payroll company. I like Gusto. I'll go ahead and drop the link in the description box for the Tax Strategies Mastermind. And they run payroll, right? And they also issue all the 1099s for those who don't have employees but have contractors. So you don't have to worry about that, right? Because there's a penalty if you don't issue your 1099s on time. And it's just easier when you hire a company to do it, particularly if the cost is minimal. So if you're going to designate an S Corp, and just as a reminder, an LLC is a business designation. An S Corp is a tax designation. And so the minute you designate yourself as an S Corp, you file Form 2553 and you put yourself on payroll. Hire a payroll company. I don't care if it's ADP, if it's Gusto, whatever have you, whatever you feel comfortable with. And make sure that salary is reasonable. So do your research on your industry and based upon your sales, and pay yourself a reasonable salary. Otherwise, the IRS will come in and say you're just trying to avoid self-employment tax, and you will be scrapped as an S Corp, and they will recategorize it as an LLC, and you will have to pay self-employment tax, okay, and any penalties associated with it. So I just wanted you guys to have all the information, be clear. A lot of people ask me also, when do I S Corp? When you have the money, the funds, right, to pay yourself, right? Again, that goes with research. Again, I use BizStats, BIZSTATS.com. I go in, I plug in the benchmark for S Corps, plug in the sales, plug in the appropriate industry, and I get the percentage of sales that should be officer's compensation. That's what an owner's compensation is, officer's compensation, okay? So I hope this was good info for you guys. Go ahead and join the Tax Strategies Mastermind. It is deductible to business owners and real estate investors and those aspiring to be either. So I hope to see you there soon. Have a good one.